Hello, welcome back. So, a few subscribers of my channel were asking about two companies, Naspers and Prosus. And so I got requests about those quite a few times actually. And I was like, okay, let's take the time to make a video about it. Now, I wasn't really aware of the companies and what has been going on with those and why people are actually asking about them. And so I had to dig quite deeply and spend quite some time in order to make this video. And so if you're here and if you're enjoying the content, please leave a like because that really did take quite a while actually to make this video. And it may actually help with your investment decisions. And so I went through a lot of content and a lot of different articles. And I found this one, which actually describes the situation very, very nicely. Initially, I wanted to make notes in order to tell you about the story here. But this article will actually help you understand, and we can actually go through this one together so that I can explain what's going on. And I will also tell you a few more things about the whole issue here. So, based on what I was reading, Naspers and Prosus are basically stocks that people want to hold as a way of holding Tencent. This is the main motivator behind this decision, potentially, of buying these two companies. And now I want you to understand what has happened between Naspers and Prosus and Tencent, really. And so we're going to move forward with the article here. And you will see that the article first starts with mentioning that Naspers is changing its structure a little bit. And that mainly has to do with the fact that they want to lessen the discount of their stock in comparison to the Tencent stock. And this is because Naspers, as you can see here, is a South African listed holding company, as you can see, with interests in online retail, publishing, and various other venture capital investments. So basically, the company is a very, very old company and, generally speaking, a reliable company that has been buying investments, has been a holding company of all sorts of different types of investments. And Prosus has been a subsidiary of Naspers. And so it's basically a branch, kinda, of Naspers. And is actually also holding a lot of different companies. And as you can see here, I have a list of the companies from their official Prosus website that Prosus is holding here. You'll see that they are holding companies like AutoTrader is one that you may know. I did know about this one. Or eMag is another one that I knew. And you may actually be aware of more of these companies. There are generally speaking some smaller companies that are hopefully doing well for the company, I suppose. So you will see here that the Naspers' rise to dominance over the past 20 years has been driven by the investment in Tencent. And what happened is that in 2021, Naspers purchased almost 50% of Tencent, which is an insane amount of stake here. So they have been a very, very early investor. And then Tencent grew and became one of the largest companies in the world. And as you can see here in the charts, look at what 2021 the company was doing. You cannot even get it in this chart. It was actually very, very low. And look where it is today and where it was actually a few months ago. So there has been massive increase in the stock holdings. And Naspers has held most of its stake, so it hasn't really sold. I think they actually sold some from Prosus, some of the assets, some of the stock of the company, but still they have a very, very big stake in the company. And you will see here that the article then talks about a discounted history. And the reason for that is that what's happening is that when you are a holding company, and you may be holding, let's say, 50% of shares of a company, your holdings in terms of their net asset value are generally regarded inferior to actually holding the shares of the company themselves. And we're going to talk about why in detail a little bit later in the article. But the important thing to understand is that holding stock in Tencent, the actual stock actually is worth more than holding stock in a holding company. And that's generally true for pretty much all the holding companies, including things like companies like Berkshire Hathaway. So that's not something that is very, very weird, but it can have some effects on the company itself. That's the thing. And so you will see here that in practical terms, when a company trades at a discount to its net asset value, which is what an AV is. This means that if investors were to hold individual positions in each company, what I was saying earlier, if you were to hold Tencent individually, it would be worth more than the holding shares of the company that owns these assets. And we're going to examine why this happens. And currently, as you see, both Naspers and Prosus, they trade at discounts to their NAVs, and pretty steep discounts, I believe. I was reading that it's about 40% or so. And it's driven by a lot of different reasons why this discount happens. And again, I wanted to create like a note, like take some notes in order to talk about this. But the article here actually has a great breakdown of why this happens. So let's talk about these reasons why the stock like Naspers stock is trading at a discount in terms of the net asset value of Tencent. And this is something that's very important to understand. Now, that doesn't necessarily mean that it's bad to own a Naspers or Prosus. Not at all, because there are advantages and disadvantages, and we're gonna talk about those too. But it's important to understand what's happening. That's the thing that I want you to know. And this is what I'm trying to instill with this channel here. As long as we are informed and we know what we're doing, it's potentially fine owning either Naspers or Prosus. It's something to be decided in terms of the financials after that, I suppose. But we need to understand the story and what's going on behind the company. Now, you will see here, the first thing, the conglomerate discount. Conglomerates like companies like these kinds of big companies that are actually holding all sorts of different types of investments. And that's because the company itself actually has some costs, and it adds an extra layer to the holding. So if you're holding Tencent, you only have Tencent. But if you're holding Naspers that holds Tencent, then you have an extra layer in between, and that costs money to operate. So this is one of the reasons why you are getting a discount. Now, there are also different share classes, and this is another very complex topic that I was reading about in terms of Naspers and Prosus. It's a very complex structure in terms of voting and shares here. And it looks like management has some voting rights, but then doesn't get too much of the profit. For example, in Naspers, sorry. For instance, like I was reading about these kinds of structures that the company has, and it is a little bit uncommon normally, but it's not uncommon in South Africa. And so you will see here that this is another potential reason why investors actually struggle to hold Naspers management accountable for actions, and that's because their shares, the normal shares, the stockholder shares that you get, carry less voting power, and so that actually skews the valuation for the whole company as well. Now, Tencent, of course, is one of the investments that Naspers has made, but it also has some other investments, and so these investments are also valued and accounted for in terms of the assets that the company has, but they don't seem to be generating good enough cash flows. And you can see, like quickly here, I was actually looking at Tencent here, but I have Naspers as well, which I have taken a look at. And you will see here that the free cash flow of the company, let me take you to the cash flow, has been pretty much negative. Oh, sorry, that's here. It has been pretty much negative. And so investors would be cautious about the company and would have doubts that maybe the management's ability to add value outside of Tencent is not great. And that also adds to the fact that there's a discount for the company in regards to when you compare it actually to Tencent. So the variable interest entity, that's a very interesting thing, and that has to do with the way the Naspers acquisition has been set up through a variable interest entity here, and that gives Naspers the right to accrue dividends from Tencent, but not full shareholder rights. And as you can see here, the article points that the reason is complex. It has to do with technology companies in China. I suppose it's mostly about politics and policies. And it means that they are not fully owned by foreigners, something that most of you may be aware of. The way companies are working in China, they are not really public companies as you know them in the US. They're a little bit different. And this is a little bit of an unusual shareholding structure that investors don't really like too much. And this also adds to the extra discount that they may be getting. There's also tax considerations that I was reading about, and they are obviously very attractive levels for the Tencent investments. For instance, they are generating cash and all that. But at some point, in order to actually make this cash true, they would have to be sold, right? But this triggers a capital gains tax event that will be at least 15%, and so that adds an extra thing to to the company's burdens here. Just because this company is all about holding other companies, and so most of its free cash flow is coming from these companies, and it's not just operations that can be manufactured accordingly in order to save yourself from taxes and things of that sort. It's not the same thing. When you sell, you do have an event that you cannot really avoid here. Now they don't intend to sell Tencent. I have been reading. I mean, Naspers hasn't really been intending to sell, but Prosus may actually be selling a little bit, I suppose, a little bit later. Now, the size of Naspers on the JSE, which is basically the African index here, is also huge. It's large, very, very large right now. It makes it difficult for local asset managers who wanted to hold more Naspers. They're unable to do so because of some regulatory and risk limits. I mean, you can understand that when something becomes really, really big here. And so you can see here that these are some of the key reasons why there is a steep discount for the company's value, for the company's stock here. When you compare it to to the actual company that they are holding, like Tencent, you see the reasons here, and they have tried, like the Naspers management. They're taking some interesting actions to try to narrow the discount to make it smaller. And you can understand that you may have heard that you want to be buying Naspers and Prosus in order to gain Tencent at a discount. And you may have thought of that, and you may have been hearing that. But when you're buying something at a discount, your buying is actually worth less as well. Is on discount as well. Nothing is free. So when you're buying Tencent that's held by Naspers at 40% of a discount, Naspers is actually worth 40% less than than Tencent. So than the Tencent holdings net asset value. So it's not like you're buying it for free. That's not really the case at all. So you are still buying the company. You're going to be buying Naspers and Prosus. It's just that you're at the current moment of time you're getting it at a discount, but that discount will not magically disappear. It's always going to be staying there, and it will be shrunk if things of that sort, like here, the company is buying food delivery assets and bundling pay TV assets, as you see, listing Prosus, for example. They are taking these types of actions in order to shrink the discount. And if that happens, it's then that you are making money. But don't expect that you are actually getting a discount on Tencent, because you are not. It's not what's happening, practically speaking. It may feel like it, but it's not that. So this is something that you really need to understand. There is no free money out there. So that's very, very important. And there are some debates here and the conclusion of the article. This is a fantastic article, by the way. It has everything that I wanted to talk about in one spot. And you will see here that some of the pros that you have from potentially purchasing Prosus or Naspers here. So Prosus trades at a narrower discount. And as you can understand, now that we're examining the article, you kind of already know why, right? It's an extra layer to Naspers, because Naspers is actually Prosus is a subsidiary of Naspers. So this adds extra on the discount that you are potentially getting. Global investor base, of course, yeah, it's accessible by global investors. It's in Amsterdam, Prosus, so very, very interesting company to potentially invest in. A higher free float is what Prosus has, and that creates more liquidity. But that also, bear in mind, this can also be a con that the article doesn't mention here. It can actually be much more volatile in terms of stock price movements. Higher floats, higher movements. That's also important. And also Tencent exposure, because this is probably why you want to be buying an Naspers or Prosus here. And this is something that I'm pretty sure most of people have been looking at Prosus and Naspers for. That's a weird name, because I'm always getting confused with Napster and things of that sort from the old days, but it's Naspers. Sorry. And tax consequences. We have already talked about the large capital tax events in the case of a sale here. The deal complexity, the deal and the actual structure of the company is very, very complex, as I mentioned earlier. And I was reading an article about it, and this is the article that I was reading about it. You can find it if you want to read more details. Naspers and Prosus are a strange dish indeed. If you want to read more about the structure, just look this up and you will find the article. It's very, very interesting because it explains how the deal happened, and you will see here that the result of all of this is that Prosus now owns 49% of Naspers, and Naspers owns 56% of Prosus. So as you can understand, it's a very, very complex structure, and if you are interested in this, you may want to be taking a look. So it's very, very complex. Ramp asset exposure. So you dilute exposure to Naspers ramp assets by converting shares into Prosus shares. And management control is a concern as well, because of what we discussed earlier, the different types of shares and the voting rights there. And even if investors do partake in the share swap, there's no guarantee that the Prosus discount will narrow, of course. We don't know that. This is something that they are trying to do. So you can kind of see what the company is doing. And if you take a look at the company's financials here, I do like the fact that they are making net income. They were negative in terms of free cash flow, which is something that I don't really like that much. But in terms of profitability, they were sitting at a very high return on equity, which I do like a lot. And so their total debt to equity is relatively fair here. So I don't see much trouble for Naspers. And for Prosus as well, is a company that has all sorts of different ticker symbols. This is the one that you were probably looking at, ProSY. And if you take a look at the overview here, you will see that it has fallen a lot as well with all of these companies, Prosus and Naspers. And the free cash flow, which is what I want to examine here, is again a little bit in the negative, which you would kind of expect, being a subsidiary, is having similar operations here. And yeah, generally speaking, it's making for the most part negative cash from operations, but it's fairly positive in terms of revenues, and so I believe net income as well. It was positive for the company. Let me find it here. Yep. So now don't be too interested in this result here, this value, because this can happen for instance for the sale of investments. From the sale of investments here, this is what really skews the value. So don't be too excited about this one. Yeah, I'd say that we're mostly looking at these levels. So in the end, what would I be doing with this? Well, again, it's not it's not a decision that's either a buy or a non-buy. Myself, I don't really like to get into these types of complex structures, and personally, I would prefer to hold Tencent directly. But for somebody who is who is interested in holding this kind of company, which is a holding company, and it's a company that's been there for many years, I'd say that Naspers is an interesting company to hold. Though again, I'd probably myself avoid it and just hold Tencent directly because of the reasons that I mentioned earlier in the article, in the video. And Prosus is a similar story. I mean, I would still potentially be interested in the company, but the fact that I'm getting these extra headaches, I'm not sure if it's worth it over investing in Tencent. If you are actually wanting to invest in Tencent through this and you are thinking that you're getting a discount, because again, you are not really getting a discount. This is something that you need to understand, and that's what I wanted to make you understand and make it clear through the video, that you are getting a company that's holding Tencent, but this has its disadvantages and its inherent discount, that it's not going to disappear all of a sudden. So bear that in mind, very important. So, and if you like Tencent, this has also been discounted a lot from the markets. You should potentially buy Tencent instead of owning Prosus or Naspers. But again, it's obviously at the very end is your decision. But myself, I would, as I mentioned, I would potentially probably buy Tencent if I wanted to invest in it and not worry too much about these holding companies. I would, if I were to buy this kind of holding company, I would examine it completely individualistically, and just forget about the Tencent stake completely. In fact, the fact that they have so much stake would probably urge me to buy Tencent instead, just because of all these reasons that we examined earlier. So hope this was useful to you and kind of helped you a little bit with your decisions. Again, this is not a go or a no-go necessarily. It will come down to what you think. But as long as you know what's happening now, you can make your decisions. Hopefully I helped a little bit, and if you did get some value out of this video, please leave a like and subscribe. Again, that took a long time to make, and so you can say a little bit of a thank you with that. And I'd love to see you around, so you can join our Discord channel too. I'll see you in the next video, guys. And in the meantime, take a look at this video that I made earlier, and it talks about Facebook. Interesting, very, very interesting company to examine lately. Thanks for watching this one, and I'll see you soon. Bye-bye.